Good evening and welcome to a brand new show of Markets Tomorrow, and what a day of trade it's been for Indian markets. Just when it appeared that Indian markets had hit a patch of consolidation, bulls have made a roaring comeback, but the big question is, are they here to stay?
Oh yes, but we've closed above 7,600 in the session. In fact, over the next half an hour, we will be getting you a 360-degree view of how to approach actually trade tomorrow. Gautam Trivedi, MD and Head of Equities, Realty Capital Markets, will be joining us with his views. Amrish Balaga, Independent Market Analyst, will be giving us his perspective, and Mitesh Thakkar will be giving us an insight onto the technicals of the market post today's rally.
And from yesterday's low, Nifty has added 200 points in matter of less than 24 hours. That's extraordinary for any market in percentage terms. Nifty has closed above 7,600. There was all-round buying, but if I have to really tick mark the man of the match, it has to be the banking sector. Banking stocks today, across the board, they were on a tear after Reserve Bank of India eased norms on infra lending. However, power finance and power housing stocks, they were on the receiving end, as traders thought, and some fund managers also thought that competition for some of these NBFCs will intensify. There was a late comeback and there was a powerful comeback in some of the infra names. IRB, JP Associates, they managed to migrate up, and there was strong recovery in real estate stocks. DLF clearly led the rally. Strong Chinese GDP growth, 7% plus. Chinese economy is expanding, it's not contracting, helped the metal stocks, and in terms of specific names, IDFC 8% up on strong open interest addition. There was multiple block deals in Mahindra and Mahindra which kept it going, and if I have to map it down to the absolute gainers and losers, they're there on your screen. ICICI Bank, Axis Bank, State Bank of India, and losers, handful of them, Ultratech Cement and Asian Paints.
In the broader markets as well, just want to take you through some of the gainers in the session. You had an HCL Info that did well. Financial technologies also performed in the session. India Glycols, ENIL, Sundaram Fastener, these are some of the stocks that performed in trade. Adani Port, on the clearance they've got environmental nod for the SEZ, was up 7%. Unitech also performed in trade. On the losing side, you had key prominent losers in a PFC and an REC in today's session. Not to forget, LIC Housing Finance is also weak.
So let's start a panel discussion, and Amrish, let me kickstart the panel discussion with you. What has done the trick for us, and what explains this remarkable comeback? Amrish, is my voice reaching you?
Yes, Nikunj. I
guess everyone is surprised, Amrish, just like you.
Absolutely. I was also quite surprised the way the markets have moved up. I think it is clearly because of the announcements which we had in the last 2 days post the budget. I think that has brought sentiment change, and I see this more as a recovery than a fresh run up. So I think there will be resistance at 7,700 levels. So I really don't see the markets moving too much beyond that.
Right, Gautam, post the budget, we've seen a lot of chop and churn. Do you think that the markets have hit a pause button, or do you think, with this rally, we are perhaps looking at another strong move from here?
Yeah, I think there is a bit of a pause post the budget, but I don't think that's something to get concerned about. I think this is really a buying opportunity. And as I've been saying, I think the area of focus really should be the mid caps, because the large caps have obviously had a great run. And of course, there's still pockets out there of large caps that will do well. But the real rally that has begun about 2.5 months ago is in the mid caps, and that's really where the focus should be.
Mitesh, how impressive is today's price action? Bulls are back, but are they here to stay? Do you think we have a trading bottom in place?
I think more than interesting, I think it was also surprising. We were looking at some kind of positive bias and an upside possibility once the Nifty started getting past 75, 60, 65. But the strength was clearly more on the surprising side. It does look like that we have a trading bottom in place, and I think unless until we start breaking below 7550 again, there is a good chance that the Nifty should head towards 7800, which is the recent highs, retested. Possibilities of breakout are also there, but let's take it at one step at a time. I think what is important and interesting is that the Bank Nifty, which was a key component of the Nifty, appears to have done a big correction. It's given a big pullback to the election day result gap, and I think from there it started or signaling sort of a fresh up move. I think if this up move can sustain in the Bank Nifty, and if you can see the Bank Nifty start getting past 15,600, I think it could possibly lend a lot of momentum to the Nifty itself, and therefore then we can look at 7,800 being crossed on the upside. So the short-term bias has clearly turned positive. A lot of other individual stocks which are also index heavyweights have given buy signals. Metals as a pack has started to move up. Reliance appears to have made some kind of a short-term or an intraday or a immediate bottom. I think that could be an interesting play as well.
Gautam, so sectorally, what is it that you are overweight on or underweight on respectively at this point?
Yeah, we are still overweight the financials, overweight cement, very much overweight the construction space. But again, outside of L&T, there isn't that much out there that is in the large cap space. It's mostly thereafter mid and small cap. Of course, a lot of these stocks used to be large cap. And the other area we have overweight on is the cap goods space.
Amrish, the way banks have made a comeback, looks like no one's bothered about poor monsoon. There is enough and more data which seems to be indicating that monsoon is poor, and that's going to add to the inflation.
That's true, because of which I'm clearly saying the upside for the market is limited. There's a lot of froth right now. Sentiment is good, but things at the ground level are different. And that arbitrage which is there should be utilized and possibly booked out to a certain extent at this point of time.
Comment on that, Mitesh, how are you looking at some of the movers from the banking space which were key performers in the session today? Also, PSU banks made a smart move.
So as I think mentioned, the Bank Nifty clearly is giving some kind of a buy signal, and I think that's one sector which could lend a lot of momentum to the Nifty. But it's not the PSU lot. I think it's the private sector lot which is slightly more exciting in the immediate short-term basis. I think stocks like ICICI Bank, and I do expect a new high and possibility a significantly newer high for ICICI Bank, the way the stock appears to have done with its correction and consolidation. I think once it manages to get past 1980, which was our first trading target, I think then we are looking at levels of around 2100 for ICICI Bank. Similarly, a stock like ICICI Bank, I think these two are looking the strongest in the short term. And ICICI Bank can head towards about levels of 1530, which is the recent high which the stock created. So I would be quite positive, but playing it very, very stock specific, because some of the banks are not yet participating.
Amrish, coming on metals, it appears that China is out of trouble. If China is out of trouble, is it time to buy into metal stocks?
If that's true that it's out of trouble, then yes, possibly it's a time to buy metals. But the way they have already moved up in the last 2.5, 3 months, at this point of time, I clearly feel that quite a few of them are a bit on the expensive side. But yes, the momentum is there. It can move up some more from here. But as an investor, I'll not really buy fresh at this point of time, because most of the stocks have doubled or tripled.
Gautam, aside of IT, what about defenses and pharma as well as FMCG?
I think the interest level in FMCG in general from investors is very limited at this point. And the bias still remains for the higher beta stocks and cement, financials, and so forth. But I think the reality is that with respect to pharma, in some sense, it's less sensitive to the rupee dollar, unlike IT. So people don't perceive it more as an export play, but more perceive it as what is the next product they're going to launch and what's the growth from that product, whether it's an ANDA filing or a domestic product. So I think from that standpoint, pharma is still not clubbed along with the exporters like IT.
Mitesh, whereas banking was the leadership sector, there was enough and more action in the beta space, metals, real estate. Do you think somewhere beta stocks which went through a patch of consolidation, which went through a painful grind for 8, 9, 10 days, is that grinding process over?
In fact, to me this appears that there is some kind of segregation happening. I think even in the beta space you would see that some stocks are doing extremely well and are making new highs while the others are not. So a stock like Tata Steel or Hindalco I have given very strong chart signals on the buy side, while a stock like Jindal Steel and Power and SAIL are still lagging behind. Similarly, in a real estate pack, I think I do like DLF a lot, but I think HDR is still trading. Indiabull Realty might give a buy signal in a day or two if it sees some kind of continued buying. So it does look like it's a segregated pack, but for the timing, I think what is happening is that the larger cap stocks are clearly showing momentum, and that should augur well for the Nifty itself.
Nifty has recovered 200 points from yesterday's low, but is Nifty on its way to touch a new high which it touched on the budget day? Domestic institutional investors have turned net buyers in the cash market. Now typically domestic institutional investors, they always like cyclicals over defensives, mid cap over large cap stocks. That's one space which has not been very active in the market now. It seems to be active, and that really has done the trick for Indian markets because retail participants are back and mutual funds are getting a lot of money in the individual schemes. Key numbers tomorrow, and it's a big day for Nifty 50 companies. Both Bajaj Auto and TCS, they would come out with numbers. And for a mid-cap market watcher, there is Rallis and Mindtree. So these are a couple of factors which really could have impact on your money tomorrow.
Oh yes, indeed. Let's just get in some specific names that were active in today's session, and just want to get your attention on the auto pack. Amrish, what's the sense right now? I mean, we've had some trades on Bajaj Auto, but Maruti, M&M, between the four-wheelers and the two-wheelers, where is the stronger bet?
I would still possibly stay with M&M and Maruti in the four-wheeler pack, and possibly Bajaj Auto in the two-wheeler pack. I think these are the ones which will continue performing. June was good. July possibly should be slightly better than what we saw in June. But then over the next 2 or 3 months, it could be more or less flat. So I think you'll also get possibly levels lower than this to get into these stocks. But even at these levels, there is value.
Oh yes, indeed. Bajaj Auto's numbers are expected to be out tomorrow. 14% growth in revenues and about 11% growth in profits is what we're expecting Bajaj Auto to deliver in quarter one. And some of the other names that we spoke about, Mindtree as well as DB Corp will also come out with numbers. TCS, of course, is the big one, but that one comes out post-market trade. Mitesh, come to you on a Bajaj Auto and a Mindtree, DB Corp. Anything that you like out of the three?
I think DB Corp appears to be, getting into some kind of short-term uptrend. I think it could get past 340, which was the recent closing high, and head towards 365, 370. So that looks interesting. Bajaj Auto, in fact, has corrected a lot, and now very close to support areas of 2100, which was the breakout level. So if it can do some kind of sideways consolidation and then give a buy signal or start getting past 2175, I think it will resume the uptrend and then head towards 2200, 2250 on the upside. So I do like the stock, but I think, as of yet, I think there is no clear trading signal over there.
Okay, let's discuss IDFC, and IDFC today was the real man of the match. Amrish, there is every reason to believe that for IDFC in the short term after the new RBI norms, things will only improve. But at 150 rupees, with fears that return on margins and return on capital will be diluted because IDFC is in a process of becoming a bank, is IDFC still a buy?
Not at 160, 165 levels, possibly because of momentum it can go up to levels of 170, 175, but then once it gets converted to bank, there would be a margin pressure at least for the first 3 to 4 years, and that's exactly what we saw in Kotak when it shifted from Kotak Mahindra Finance to Kotak Bank. So I think because of which I think the upside will be limited. In the last 2 or 3 days, even the budget was quite positive for this stock, because of which we have seen that move. But I think it will get over by the time it reaches about 170, 175.
IDFC in the session was a top gainer, up 7%. Gautam, the other one, which requires some discussion, was Reliance. They've been allowed to retain 3 fines in KGD6 by the Oil Ministry. What's your call on Reliance? It's at sub 1,000.
I think we like Reliance, terrific company, phenomenal execution, and obviously the biggest cash flow among all of the companies in India. But having said all of that, I think from where it is at this point, the market and investors in particular are looking for guidance on what the production is going to be from KGD6, and hopefully, as the government said, in the next 3 months they will solve the gas pricing issue. So I think that is something which we should be putting behind us. It's been going on forever and is clearly hurting the company's stock price. So I think finalization of the gas price hike, 1, and 2, the absolute production volume increasing will be the two big triggers for Reliance to move ahead from these levels.
Gautam, what is your take on mid-cap IT? Because on a relative basis, mid-cap IT stocks are looking cheap, and tomorrow you've got Mindtree, which is the big one, which will come out with numbers.
Well, but that's always been the case. I don't think that's necessarily unique at this point of time. We honestly prefer large cap to mid cap IT, and that discount, for the most part, has been around for over 10 years now.
Gautam, what about your top 3 ideas from the mid cap space? Where are you advising your clients to allocate their disproportionate amount of money?
Yes, disproportionate amount of money. That's an interesting way of putting it. But yes, our top picks would be Crompton Greaves. We like that a lot. Our target price is now 235. We've rolled it over. Second would be Finolex Industries. Remains one of our top picks. Great management. Stocks already tripled in the past 24 months, but we see significantly more upside. And the third is an interesting company. I heard you talking about FirstSource. We like Hinduja Global, that's trading at a 15 to 20% discount to FirstSource. And the market and investors are just starting to understand this company. We've had a series of meetings with the management, and the response has been terrific. So these would be our top 3 picks within the mid-cap space.
Mitesh, good old CEAT. 42 rupees of CEAT. Do you think tire stocks which were looking slightly volatile, slightly choppy, have the rediscovered momentum?
Looks like that. I think, again, these are stocks which gave a good correction for the last 1.5 weeks, gave a pullback to their short to medium term averages. And amongst the lot, you have picked the right one. I think CEAT looks the strongest. So I would not only look for a retest of the earlier highs of 700, 715, but I think possibly this time a new high should again be created, and I think 750 could be a good working target over here.
Gautam, anything from the media pack that you like?
In the media space, I think Dish TV at lower levels definitely looks interesting. But I think the bias really is, and the focus from an investor perspective is not that much on media at this point.
Amrish, as a basic strategy, how are you allocating capital? Are you conserving some cash with the assumption that as the year unwinds, this market will give better entry points?
Absolutely. In fact, allocation is nearly 70% for equity right now. But clearly in the past couple of weeks, booked out to a certain extent, holding about 12 to 13% in cash, waiting for a correction to again buy in at lower levels.
Poonam joins in with a quick list of stocks to watch out for in tomorrow's session. Poonam.
Well, Tanvi, what we understand from the dealers is a buy on Praj Industries. The company is diversifying into non-ethanol machinery, and also the company is going to benefit from higher ethanol blending in petrol. Not just that, HDFC Mutual Fund has been recently buying shares, as well as utilization levels are likely to improve from the current levels for Praj Industries. So a buy coming in there. The next stock is Colgate Palmolive, wherein a buy coming in from the dealers. The stock is already up nearly 4.5% in the last 4 sessions, and we have seen a good amount of block deals also in today's trade. Our company has hiked prices for toothpaste, as well as the first quarter results. We are going to see EBITDA margin expansion by nearly around 80 bips, and this company is going to report better revenue and better EBITDA growth after ITC in its entire consumer space. It also remains top mid-cap pick by Kotak, and also UBS has a neutral call on the stock with a target price of 1,800. So buy coming in on Colgate Palmolive.
Gautam, let's talk about Bharat Forge, because that's been one of your top ideas. Bharat Forge is now trading at about 600 plus. It is a leader in that segment, and defense seems to be the big opportunity for that. Do you still think that Bharat Forge warrants a buy?
Well, I think Bharat Forge is something which we really haven't focused on, but otherwise intrinsically I don't think there's any issue with the company. It's a good way to play both the export and the domestic story. So I think auto story. So we like the stock, but we don't really have a high conviction on it at this point.
Okay, fair enough. Just get in a quick perspective from you also, Amrish, on some of the stocks that you would be recommending as high conviction ideas.
Shipping Corporation is one stock which I'll recommend at the current levels. turnaround case last quarter, excellent set of results. And NAV is close to about 110, and normally it quotes between 0.5 to 1x NAV. And looking at that, I think the discount is decent at the current levels. See the stock going to levels of about 80, 85, at least over the next couple of months.
Vijay, what are your top ideas for tomorrow morning? How do you propose one should trade after today's smart rally?
I think clearly on the long side, I would suggest a buy on DVs, which has given a good pullback to the earlier highs and now restarting an uptrend. That's a buy with a stop below 14.55 for targets of around 15.50. Z Limited, which had a breakout but kind of cooled off towards the end, yet managed to close above 300. That's a buy with a stop below 295 for targets of 315. And one can also add a DLF, which has managed to close above 224. So that's a buy with a stop below 222 for targets of around 242.
Mitesh, specifically what to your mind will happen to defensives? Because again, cyclicals are making a comeback. Beta end of the market seems to be showing some traction. Do you think defensives will participate or defensives will take a backseat?
As of yet, I think the view is that they might not really participate in the short term. The CNX IT isn't doing much, but few of the pharma names still look interesting. I covered DVs as one of the recommendation, but a stock like Sun Pharma or Ranbaxy, they've had a good uptrend. Maybe a day of pullback, I think, could be a good level to initiate a fresh long over there. So I think these 2-3 names still look interesting to me. But other pharma stocks like Biocon or Cipla, they've kind of given up their uptrend. So they might just get sideways and consolidate and not do much on the price side.
Gautam, any specific reason why you like the Hinduja Group stocks, Ashok Leyland and ICICI Bank?
Exactly. Well, I think the group has got a significant re-rating given how ICICI Bank has done. Of course, we've seen a change in management and the fact that the promoters handed over the reins of the bank to Mr. Sopti. I think you're seeing new management and new focus and thrust in Ashok Leyland. The stock has, from the bottom, more than tripled. And Gulf Oil is an interesting company as well because the group has gone ahead and split the company into two businesses, the real estate and explosives business in one company which listed 2 weeks ago, and the lubricants business which will be listing shortly, I think sometime this month. So the group has been doing some interesting stuff. They have some great assets, and it's a coincidence that we actually like them.
Amrish, you've given me a mid-cap idea what you like. Give me a Nifty 50 name where you're confident of a 15-20% upside in the next 6 months.
Nifty 50, there are a couple of them, L&T and ICICI Bank. I think both these are decent buys even at these levels after the sort of a move which we have seen. But then most of the stocks which I had recommended in the past couple of 6 months, I think have become multi-baggers, whether you talk of Crompton, Voltas, Titagar Wagon, Talwalkar, Siet, Bharat Forge, Motherson Sumi. So at these levels, I'll be a bit cautious and wait for a while.